Hey everybody, Economic Ninja here. I hope you're doing great. This just in, President Joe Biden has an amazing plan to change banking regulations in the wake of Silicon Valley collapse. Let's see how fresh his idea is. Now, this is a big deal. Biden to push new banking rules after Silicon Valley Bank collapse. White House plans are still in flux. We need a flux capacitor to go back to before he was here. House panel will examine They're going to examine SVB's failure on Wednesday. The White House is preparing to call federal banking regulators to impose new rules on mid-sized banks prompted by the collapse of Silicon Valley Bank earlier this month. According to two people aware of internal discussions, very quietly, but it appears unlikely that the administration will ask Congress in the immediate future to undo a deregulate. I can't even say it. The government hates it. Deregulation law passed 5 years ago with bipartisan support. In the meantime, lawmakers continue to press for answers on how the financial system became so vulnerable to failures of SVB and Signature Bank on Wednesday. Top officials from the Federal Reserve, Treasury Department, and Federal Deposit Insurance Corporations testified before the House Financial Services Committee, where members grilled the regulators on what they knew about a run on SVB before it failed on March 10th, and on officials' responsibility for the future. I'll add this. Some of them were watching the Economic Ninja channel back in November when he said this was going to happen. I think, and this is a quote, any time you have a bank failure like this, bank management clearly failed, supervisors failed, and our regulatory system failed, said Michael Barr, the Fed's vice chair. The Fed? Somebody from the Fed said this? Who's making this crap up? The Fed's private bank. I'm going to repeat this. This is total crap. I think anytime you have a bank failure like this, bank management clearly failed. You're talking about yourself, Michael. Supervisors failed and our regulatory system failed. You are the regulatory system. You're talking about you, Michael Barr. You. The Federal Reserve is neither federal and has no reserves. It's not part of the government. It's a private bank. President Biden, let's talk about some logic here. President Biden is expected to seek tougher regulations as part of a response to the crisis, which led the administration to backstop billions in deposits that you're going to owe and your children are going to owe. But hey, that's neither here nor there. They don't want to tell you that. Has been uninsured because they were over the $250,000 limit. They won't tell you that all those accounts also aren't insured, but whatever. The new oversight measures, because we need more of those, need to be implemented separately by the Federal Reserve, the Federal Deposit Insurance Corporation, wait a minute, one's federal, one's not. Okay, copy. And the Office of the Comptroller of the Currency. Biden aides, which, wait a minute, they're probably all employed by guys and gals that used to work at the Fed. Okay, copy. Incestuous. In the future, said the people who spoke on the condition of anonymity to describe plans not yet released. They don't want to release these plans because they're total crap. Man, let's think about this. The exact details of the White House recommendations are not yet clear. My editor is not doing his job. You couldn't have thrown it a little better. This just in. Don't look. You have a plan and you say, when I snap, it comes in. Oh, paper airplane. I'm glad he wrote down what it was. Credit Suisse whistleblowers say Swiss Bank has been helping wealthy Americans dodge U.S. taxes for years. Yes! This is the news we've been looking for. You remember the Economic Ninja said there's going to be this battle and these name throwing and finger pointing and I didn't do it, you did. Just like old Michael right here saying, hey, we got to get on. I blame the regulators, which is me. Don't say that. It's a con we got going. Well, now whistleblowers are saying that Swiss banks, that Credit Suisse, has been helping wealthy Americans dodge U.S. taxes for years. Well, of course, that's why the Swiss bank is failing right now, because it's been helping wealthy Americans. They haven't been helping me. The bank notoriously pled guilty in 2014 to criminal charges for knowingly and willfully helping the U.S. clients hide offshore. Wait a minute. This story just came out. Like you're talking about something that happened in 2014. You don't even know how to point fingers very well. Let's go on. Now the troubled bank appears to have violated that agreement, according to a new report by the Senate Finance Committee. Oh, those guys are brainiacs. That details ongoing and rampant abuse since then. So wait a minute. Our Senate Finance Committee is pointing across the pond and going, "You did it! You helped the evil rich Americans. You're collapsing. Don't look at our banks. They're really collapsing. Get those guys!" Oh, well, this was a report released Wednesday. Details the findings of the panel's 2-year investigation, and it takes on more urgency given the banking crisis. Oh, this just in. This comes from an amazing subscriber sharing the nothing's on fire, everything's safe. His 401k company is sending him emergency briefs. Check this out. A perspective on recent bank failures as of March 20th, 2023. Good thing they include the date. So just a little perspective, everything's okay in your account, but that crap over there, that's scary. Don't worry, it's coming to a 401k near you later this year. It says right here, what's happening? The failures of Silicon Valley Bank and Signature Bank sparked market volatility as investors speculated whether the larger financial system is at risk. The two institutions are among the largest banks to fail since 1980. I'm not feeling very comforted just yet. While we believe that SVB and Signature Bank's challenges were unique to them, more concerns have been raised as Credit Suisse, remember the bad Swiss, the ones that really didn't do anything during COVID, announced plans to secure an emergency loan from the Swiss National Bank. Well, here's the question. What should I do about it? Because they give me all of these amazing graphs and charts to put my mind at ease. What should I do about this? If you have cash in your bank and you know that you have up to $250K per depositor per bank is insured by the FDIC, if you're concerned about your exposure, you can diversify across multiple banks. Wait a minute. The Economic Ninja has been saying that for over a year, and it's been called clickbait. You can also speak to your financial advisor because they know best, because they went to Coolidge, and they have a special name badge that says, "I can tell you what to do with your money." Don't worry about what I do with mine. I own a car that I can't afford. But I can tell you. You can speak with your financial advisor about putting some of your money to work in high-quality fixed income investments. Hurry, because people are pulling money out of them. And later this year, it's all going to be figured out. As they provide attractive yields and avoid relying on a single financial institution. I call those junk rated, but that's okay. Moody and S&P will let you know in about a year and a half. As for the rest of your portfolio, stay the course. Don't sell. Don't take your money out. Volatility will be uncomfortable, but selling out of markets has historically been wrong. The wrong choice. Well, I guess, no, it wasn't really the wrong choice. Remember that one time before, 2000? If you would have sold, you would have saved a boatload. And then there was that time, before 2007, if you would have sold then. Yeah, I guess there is some times, if you would have, technically, if you would have pulled out at like the right time, you'd have some money. But, hey, what do I know? I'm just a financial advisor. I went to a Coolidge and I got myself a big degree and I went to work for a company that says I can tell you what to do with your money. So I guess, really, if you think about it, it's what do you want? Facts, fiction? Wait, hold on. What? Huh? What do you mean you're taking my car? I made the payment. Yeah. Oh, both payments? I gotta go. Listen, the point being here is that companies are trying to calm you down. They don't want you pulling money out of the banks. I gotta be honest with you. Watching how many people pulled money out of SEB and then threw it into JP Morgan Chase, I gotta admit, they weren't that bright. But hey, JP Morgan's happy and the Federal Reserve gets what they want. They take the little banks, they smash them into big banks. It's easier to control the system. Good job, Jerome Powell. All right, guys, that being said, this is the end of today's Ninja News Update. The Economic Ninja is out.